Hey everyone, welcome back to Corporate Decoder, where we decode the secrets buried in plain sight in company filings. Today we're diving into Gloo Holdings, Inc. Its latest report, and let's just say it involves some interesting deal, making that could shake things up. Stick around, because this one has a few surprises in store. If you like our straightforward, no-nonsense approach to understanding these dense documents, make sure you are subscribed and consider joining our Discord community, linked in the description below. So, Gloo Holdings Incorporated has filed an 8K report. Think of this as a company's way of urgently telling the public about major news that shareholders need to know about right away. It is not something you file every day, and it usually means something significant has happened. This report is from Gloo Holdings Incorporated, a company we've seen before. They're incorporated in Delaware. Their commission file number is 001-42964, and their IRS employer identification number is 39 to 2,250,711. The key date here is the 15th of December 2025. This is the earliest event date reported. This tells us when the ball really started rolling for whatever news they are sharing today. Gloo Holdings Incorporated has class of common stock, and it trades on the Nasdaq Stock Market LLC under the ticker symbol Gloo. They are considered an emerging growth company, which means they get to use some slightly more relaxed rules for financial reporting, at least for a while. First up, they are reporting on their financial results for the 3 and 9 month periods that ended on the 31st of October of 2025. They released a press statement about this on the 17th of December 2025. We'll get to the details of that, but importantly, they're saying this information is being furnished, not officially filed with the CC. This means it is for informational purposes, and they don't want to be held liable for it in the same way as a formal filing. It is a common practice to distinguish between what is seriously on the record and what is more informational. Now for the big news, and it is happening under item 3.02, which deals with sales of stock that weren't registered with the government. On the 15th of December 2025, Gloo Holdings Incorporated entered into an agreement to merge with Westfall Group Incorporated. This means Westfall will become a wholly owned subsidiary of Gloo. This deal is expected to wrap up in the fourth quarter of their 2025 fiscal year, assuming everything goes smoothly. Here is how the payment works for this merger. Gloo will issue shares of its class a common stock as part of the deal's price. The value of these shares will be based on the average trading price of Gloo's stock over a specific 30-day period. If we assume this average price, called the volume weighted average price or VWAP, is around $8 per share, Gloo would be handing over about 1 million shares. They promise to file an update to this report once the exact number of shares is finalized after the deal closes. But wait, there is more. Gloo might also issue more shares in 2027. This is tied to something called an earnout provision, which means Westfall shareholders could get additional shares if certain performance targets are met. The maximum value for these extra shares is capped at $1.0 million. The actual number of shares they'll get depends on hitting those targets. And again, the company's stock price at that time. They'll file another update for this too. Gloo is using exemptions from registering these shares with the government, specifically citing Section 4, and Rule 506 of the Securities Act of 1933. This typically means they are selling to a limited number of sophisticated investors, and they believe it doesn't require a full public registration. Now, like many companies, they've included a forward-looking statements section. This is basically a disclaimer saying that some of the things they say might not actually happen. They're talking about potential future events, and they're warning us that risks and uncertainties could mean actual results are different from what they're saying now. They point to previous filings like their prospectus from November and an upcoming Form 10. Q. For more details on these risks. They also state they are not obligated to update these statements if things change, unless the law requires it. Finally, the report lists its exhibits. The most significant one here is Exhibit 99.1, which is the press release dated the 17th of December 2025, detailing the financial results we briefly touched on earlier. There is also Exhibit 104, which is the cover page interactive data file, basically a digital package for the report. And the report is signed off on the 17th of December 2025 by Paul Samon, the Chief Financial Officer of Gloo Holdings Incorporated. Alright, let's break this down. The core of this filing is the announcement of a merger with Westfall Group Incorporated. Gloo is using its stock to acquire Westfall, which is a common strategy. The key here is how they're valuing the stock for the deal. It is tied to the market's perception of Gloo's value over a period leading up to the deal's effectiveness, with potential for more shares later based on performance. This is a smart move if they believe their stock is fairly valued or undervalued by the market, as it conserves cash. However, It also means the total price of the acquisition is somewhat variable and depends on Gloo's stock performance, which could dilute existing shareholders if the stock price is low or if performance targets are easily met. The fact that they are using unregistered sales of equity is standard for these types of transactions, especially when the target company is being acquired for stock. The mention of Section 4 Add to in Rule 506 suggests they are likely dealing with Westfall as a single entity or a small group of owners who meet the criteria for these exemptions. The more interesting part, though, is the earnout provision set for 2027. This is a way to bridge valuation gaps between buyer and seller. It incentivizes Westfall's management to continue performing well post-acquisition, as their ultimate payout is linked to future success. For investors, this means the full dilution from this acquisition won't be known immediately. It also implies Gloo management is willing to pay more if Westfall proves to be a valuable addition and significantly contributes to Gloo's growth. Looking at the financial results announced in the press release, which we don't have the numbers for in this specific filing but are referenced. The success of this acquisition will hinge on how well Gloo integrates Westfall and how Westfall performs under Gloo's ownership. If Gloo's stock continues to climb, the initial share issuance might not be too dilutive. If it tanks, then the number of shares issued will be higher. And the earnout could also be triggered more easily if performance targets are relative to a lower share price. In terms of company direction, Gloo appears to be pursuing growth through acquisition. This can be a powerful strategy for expanding market share, acquiring new technologies, or entering new markets. However, mergers and acquisitions always carry risks. Integration challenges, cultural clashes, and overpaying for an acquisition are common pitfalls. The market reaction to this news will be crucial in understanding how investors view this strategic move. A notable risk here is the potential for increased share count due to the current acquisition and the potential earnout shares. This could dilute the ownership stake of existing shareholders if not offset by a significant increase in profitability and market valuation. An opportunity lies in Westfall's potential to drive future revenue and profit growth, making the acquisition accretive to Gloo's earnings. In conclusion, Gloo Holdings Incorporated is making a significant move to expand its business through the acquisition of Westfall Group. The deal structure, relying heavily on Gloo's stock price, introduces an element of uncertainty for shareholders regarding dilution. The earnout provision adds another layer tying future payouts to performance. Investors will be watching closely to see how this integration unfolds and whether Westfall lives up to its value-generating potential. Alright, that is our quick decode of Gloo Holdings Incorporated's latest filing. What is your take on this merger news? Do you think it is a smart play for Gloo? Drop your thoughts in the comments below if you found this breakdown helpful. Please hit that like button and subscribe for more corporate insights. And don't forget to check out the Discord link in the description. It is a great place to connect with other finance enthusiasts. Thanks for watching, and we'll see you in the next one.